Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. Today is the 3rd of December 2013 and the time in London is 55 minutes past 3 p.m. In New York 55 minutes past 10 a.m. Happy trading to you all. The title of this video is how to trade like a smart pro trader. I'm going to discuss a specific trading strategy that the pro traders, smart pro traders, are using. This strategy is usually implemented by the middle of November. Okay, so pay attention carefully if you are a day trader or a swing trader. Let's get started. All right, the strategy is very simple. And the strategy is based on the price itself, the number one indicator, trading around a key levels. All right. Whether you are using the TSCW24 or the TSCW-SYS08, I invite you to pay attention carefully to what we're going to discuss in this video. All right. Few years ago, when I was day trading, all right, I have come across something very disturbing. I was trading happily up to the month of November, all right, and around the mid-November, around the 15th of November, I started having all sorts of problems, and I started wondering what's going on. And I was trading, day trading, using the weekly chart as my higher time frames, and suddenly in November, I start having all sorts of problems. I start losing, and I start wondering what's going on because I get into trouble, and the price was behaving in a different way. I was trading the Euro USD those years, and I noticed that something has changed, which means the professionals were doing something else that I do not understand at all, and I get into trouble. I tried my strategy, different thing that I was trying to do, and it was not working. And I was thinking that the market was manipulated, but it was not. The professional has changed the music, and they were using a different strategy. And I didn't know what was taking place. In this video, I will share with you what was happening, all right, what strategy the professional were using. And so you also, when you are trading, this strategy is valid from the 15th of November each year, and also at the beginning of January each year. I don't know what is your trading result right now, what you are going through, whether you are experiencing the same thing during this month of November, and I have experienced the same thing from the 15th of November up to the end of the year, and I get into trouble. And also at the beginning of the year, I noticed that the professionals were trading differently, and I was stepping on their feet, or so to speak, and I don't know what to do, and I was getting into trouble. So the purpose of this video is to share with you my experience, and also to reveal to you, how, to trade like a smart, pro traders. All right, stay with us. In fact, from the beginning of November, which is the 11th month of the year, the professional will switch completely to the yearly chart. So if you are day trading now, or you are swing trading, and you are going through the same problem that I went through a few years ago, you need to pay attention carefully. From the beginning of November each year, and also at the beginning of each new year, so January, so beginning of November, and also beginning of January, I recommend to traders to start implementing this strategy from the 15th, which is in the mid of November, and also at the beginning of the new year. All right, so pay attention. So if you are losing recently, or if your strategy suddenly are not working anymore, or you are getting into trouble and you are wondering what is taking place, I have a good news for you. I will share with you what is taking place. Now, from the 15th of November each year, the professional will switch completely to the yearly chart. So note that one down. So if you are day trading or swing trading, the whole year, and you were enjoying your day trading, you were enjoying your swing trading, and everything was working perfectly, all right? from the 15th of November each year, you must note down the key levels on the yearly chart. This is very important, and I will explain to you why. The same thing at the beginning of the new year, January, 1st of January, especially during the month of January, professionals are also paying attention to the yearly chart. Decisions are made, okay, from the yearly chart. And a lot of ordinary traders do not know. And they will be using the 4-hour chart, okay, the daily chart, the weekly chart, the monthly chart, and they will notice that it's not working anymore, and they get into trouble. We have here Apple stock, okay, on the yearly chart, all right, and I'll draw some line here on this chart. You can see the previous year, which is 2012, is the candle here. I have highlighted the high from that candle is at in the zone of $705, okay, so that's the orange horizontal line here, and also the low of 2012. That low is in the region of $409, so that's the red horizontal line here. I have also highlighted, my apologies, highlighted also the median line of 2012, which is the green horizontal line here, is in the region of $556 dollar, okay, that's the green horizontal line here. All right, so from the 15th of November, in fact beginning of November, professionals start watching this level carefully. I'm going to switch my time frame now, so I have those lines drawn from the yearly chart. So once we reach November, have this key level. In fact, throughout the year, you must know those key levels from the yearly chart, because professionals are always trading around, okay, key levels, especially the key levels from the yearly chart. But that strategy becomes so important or essential when we are coming into the month of November and also in the month of January. Let's switch time frame now and go to the daily chart. And remember, the orange line is the high, the green line is the median line, okay, and the red line is the low. Let's go to the daily. We are now on the daily chart. You can see the green line here. You see what the price has done. The green line is the median line, isn't it, for the for the Apple stock listed on the NASDAQ 100. The green line is the median line. You can see that on this daily chart. On this day, on the 29th of November, the price went above the median line of 2012. All right, you see here, that's the green line. Yes or no? All right. The following day, the price retested that level. All right. Now, after the price retested that level, we want to see whether the price will find a support. So after this day, which is yesterday, all right, you see here, or the 2nd of December, 2013, today we will be watching whether the price will find a support. Look what's happened. Now the price found a support, yes or no? It's today, yes or no? It's Apple stock. 3 days ago, it breaks above the median line. Second day, he retested it. Today, he went above it. He found a support. So I'm inviting you now to remember this strategy carefully and to pay attention to it, especially from the mid of November and also at the beginning of each year. In fact, you should be able to know the key levels of any financial instrument you are trading and have access to the yearly chart, all right, throughout the year. The software that I'm using here is TC2000 that allow me to see the yearly chart. I recommend to traders to see the yearly chart. Otherwise, you are seeing the part of the picture. So the TC2000 allows traders to trade forex and also to trade stock and also ETF. All right? You must see the yearly chart, okay? Very important. So this is what has happened around the median line. All right? You see now? So you see we have more data now. This is 2013 starting here. I'm going to put a vertical line there. And I want you to pay attention to what I'm saying here. This video is primarily for the TSTW24 and the TSTWSY S008 traders. So beginning of the year, this 2013 starting here, what the price has done, the year has started, his price was at a median line of 2012. He found a resistance there and pulled back, and what he went to? He went to the low of 2012. And then he went up a bit and came back again to retest the low of 2012. and they found a support. In fact, we have a double bottom pattern here. The bearish momentum is kaput right here. Look here. All right, I'm recording this video, okay, because we are coming to the end of the year, and this strategy is now implemented by many professionals, and I want you also to trade like them. So you see the price beginning of the 2013 Apple stock was coming down from the median line to the low, and then came out and then retested that low and displayed double bottom pattern, and then went up. You see, the whole year this year, the price went up. Now we are retesting the same median line where we started. We went in full cycle, in a half a cycle, okay, from the starting point. Okay, we went back to the same place. This is a cycle point right here. You see what's happening in this market now? How the smart pro traders are trading. The price is always moving from one support level to the next support level, or from one support level to the next resistance level, or from one resistance level to the next support level, or from one support level to the next resistance level, or from one support level to the next support level. That's all the price is doing. And if the price is doing that, the price is doing it all the time through a channel. You see here, it went down from the median line to the low. It was in a declining channel. Then what the price did, the price went horizontal. These are market patterns. There are only 3 market patterns. This is my message to traders so they may start improving their trade. The declining channel, okay, the horizontal channel, and what? The rising channel, especially if you are a swing trader. This is, you must work first with the market patterns. This will allow you to avoid making a lot of swing trading mistakes. So now we are in a rising channel. So from the declining channel, we went to horizontal channel. Now we are again in a rising channel. We are on the daily chart. As I show you now, these key levels are very important. Let's go now to the 2-hour chart and see whether we're going to see the same chart. Here we are again on the 2-hour chart. See, price went above the median line of 2012, retested it, and you see today, this is what I was telling you today. So yesterday the price went down. Okay, you see the green line. Yesterday the price went down, the Apple stock went down to retest the median line. Today it gap up, you see, and it's going up a bit. Always trade around key level. Do not overtrade. I want to show you another key level, all right? So stay with me. I want you to show you now, okay, the dollar-yen, the crazy currency pair, all right? So we're going to go again to the yearly chart. This video is to demonstrate to traders what the pro trader, the smart pro traders are doing. On this chart, I highlighted only one key level. Because you are my friend, I'm sharing this with you, so you also can trade, okay, like professional traders. Sometimes I get into trouble by sharing too much with traders, but okay, it's a decision that I've made, all right, because I believe that if many traders are educated, many traders understand the price, many traders understand the Elliott wave, many traders understand the Fibonacci pattern, many traders understand the market pattern, and the difference between the market pattern and the chart pattern, we will have, okay, what we call a orderly market, okay? When we have an orderly market, we keep making money consistently. But when the market is distorted, ladies and gentlemen, we get into trouble. Whether you are experienced trader or not, you get into trouble, all right? So on this yearly chart, we are looking at the dollar-yen. So from one stock, now we are looking at currency. The strategy is valid for all financial instruments, whether you are trading indices, ETF, stocks, commodity, it's valid, all right? You are trading crude oil, the strategy is still valid. So I highlighted the high of this year. Which year? 2009. That's the orange line here. That's the high of 2009. Because we want, if the price is approaching a key level, which are either the high, the low, and the median line of a particular year, let me say this again, if the price approaching either the high, the median line, or a low of a particular year, these levels are very important. We must acknowledge them and pay attention carefully. So now we see that the price near the orange line, which is the high of 2009 for this dollar-yen, okay? So we will draw that level and monitor it. Now let's switch now to the daily chart and see the activity around this orange line, which is a key level. Remember, this is how the smart pro traders are trading, especially when we come to November and also beginning of a new year in January. All right. So I'm sharing this with you. Okay. Pay attention. I know you want to learn. You will take some time. You will make some mistake. You will go round, but use the demo account. Use the 5% money management rules and go step by step, all right? Don't force it. Don't throw money at it because you need the money to trade when you are ready to trade, okay? So look at it. The orange line is the high of 2009. So I can put again a vertical line there to highlight the beginning of 2013 for this crazy currency pair, as I like to call this currency pair, right here. So we know that this currency pair was a little bit overbought, but look, beginning of 2013, this year, the market, the professional, the smart professional traders want this dollar, because they were expecting the quantitative easing by the Federal Reserve to stop. They know that at one point, either this year or 2014, the Federal Reserve cannot continue to print the money. So at one point, they will stop. So when they stop printing the dollar will go up. So the market sometimes is ahead of the decision, which means it's already included in the price. So right now, all these are already included in the price. All right. So beginning of 2013, the price, the direction of the price, the professional want to bring the price to retest the high of 2009. What the price was doing, the price was in a rising channel. That's all. You won't see anything else. 3 patterns, nothing else. If anyone is saying to you something complicated about trading, show him or her the 3 market pattern. That's it. Say to him, that's all the price doing. So we brought it to the high, from the high of 2009. You see here? So price went above it a little bit, only to find a resistance and come down. So if the price display a new high and goes back below that high or goes back below the previous high, it's a weakness. All right. If the price display new high and then goes back below the previous high, that's why I'm putting my horizontal line, that's bearish. All right. Can you see it? You understand? The price display new high and goes back below. Okay, the previous high is a weakness. We can acknowledge it, but here was beautiful. You can see that the price D below the previous high, which is the blue horizontal line here. Look what we did. Pull it to retest it here, and they sold it down. All right? But the point I want you to pay attention to is the key level on the yearly chart, which is the orange line here. So beginning of the year, we bring it all the way to go above the high of 2009, and we quickly bring it back down. Again, this year, in June this year, up to July, we will retest that level, the orange line again, and then we bring it back down again. All right? And then again, in September 2013, we came again very near, and we pull it back down again. And we have this double bottom here. For one reason or another, the market want to retest the high that we have created this year, the highest high this year. This is where the price went to recently. It's not by mistake that they push the dollar, they push it to 103.47. Are you in the market? That was yesterday. Can you see it? Yesterday, all right? You see, they push it to retest the high of this year, which is right here. Now they retested it, they are taking profit again. All right. So again, now we are again above the high of 2000. All right, 2000, okay, 12, and the price, okay, you see, 2009 for the dollar yen, 2009 was 2012 for the Apple stock, for the dollar yen, 2009, the high of 2009, and now again, we are pulling back again today. Tomorrow, we'll see what's going to happen, whether it's going to find a support or not. You see how the price is moving from one key level to the next key level, how the smart pro traders are trading. I want to show you another financial instrument. This time, we will discuss the dollar yen. In fact, I'm coming very close to my the closing time of I exceeded my time now. In fact, I didn't want to go over my 20 minutes, but okay, that's fine. All right, let's move on. All right. So this is the euro yen, another currency pair. We will go again to the yearly chart. I've drawn some line already on my chart, and I want to share with you because you are my friend. Okay. All right. By the way, I received all the emails that trader has sent to me recently. I apologize to traders. I've been very, very busy, okay, especially this month. I will get back to you all, okay? Thank you for sending me your email, and I will get back to you, okay? So on this yearly chart for the euro yen, the red line is the high of 2009. The red line, or the red horizontal line, is the high of 2009, and the green line is the high of 2010. Okay, 2009 and 2010. 2009 is the red line. 2010 is the green one. Okay, all right. So those are key levels. Where, because the price is approaching those key levels, we can draw all of them on each year. All right, and then when the price is approaching those key levels, we are watching it. So if the price here, we want to know which key level is the nearest. Okay, so that's where we are now. The green and the red line. Let's go back again to the daily chart and see what the price has done around those key levels. You'll be amazed what the price is doing. Watch it, ladies and gentlemen. Let's watch it, all right? So you see the green line, that's the high of 2010. This year, again, I'll put a vertical line. At the beginning of 2013, right here, you see now, at the beginning of the year, they brought it slowly, professional smart traders brought it what? Well, to the high of 2010. And the price remained below it. Recently, it's only recently because, in fact, I was telling traders to look for opportunity to sell. Now we break above the green line, which is the high of 2010, and the price rush went fast. Why the price rush fast? Because there's another important key level. So after the price found a support above the high of 2010, the price ran fast to the high of 2009. That's where we are now. Today, you see, yesterday it went above it nicely and closed above it. Can you see? All right, and then retested it. Let's go to the hourly chart, and we'll see whether we're going to see those lines. If we can't see on the that's the green line here. That's the high of 2009. You see, the low, the double bottom here, and from there it ran away to the red line. If you go to the 2-hour chart, maybe you will see the red line now. So this is a multiple time frame trading. You see, from the yearly chart, we can see a key level from the yearly chart on our 2-hour chart. You see now? So you see now? So the green line is the high of 2010. The price display double bottom pattern here, and run to the high of 2009, where it is now. If the price return back below the red line, which is the high of 2009, and find a resistance which means below it, and come back and retest and find resistance there, that's a sell signal. All right, but priority to bullish signal above the high, because if the price stay above the previous high, it's still bullish until it goes back below, okay, the previous high. All right, so the latest high is in the zone of 14013 for the euro yen. It makes sense. It's also powerful. Account of traders, okay, to remember this strategy and to test it, okay, and to own it themselves, okay, to make it their own strategy. Because when we say to own the strategy, what do I mean? I mean you test it, you verify it, all right, and you are happy about it, and not only that, you understand it and you know how to use it. This is the meaning of saying, okay, to own the strategy. I do not care, all right, ladies and gentlemen, this is not the right word to say. I do not mind, okay, I do care, all right, I do not mind if traders, okay, have a losing trade, but what I care about is that traders understand what is taking place so they can improve, okay, their trading ability. That's all I care about. I don't mind if losing trade do happen, but I do care if traders are improving their ability to trade, all right? That's the most important thing for me, all right? So now this is the Euro USD, the dollar, the Euro dollar currency pair. Again, let's go to the yearly chart and see how the smart pro traders are trading. From the yearly chart, I draw one line here, which is the black horizontal line here. The black horizontal line here is the high of 2012. Like for Apple stock, because we know that Apple stock is a market leader. A market leader will propel the market itself, which is the S&P 500, the NASDAQ 100, and the Euro USD very often will move in the same direction, like crude oil or the S&P 500 itself or the Dow Jones. So it's not surprising to see that you see the high of 2012, it went above it like Apple stock, as I showed you from the beginning of this video. We want to understand the correlation. The Euro USD, though it's a currency pair, is a market indicator. All right. So that's the high of 2012. Okay, let's go now to the daily chart and see how, okay, the professional were trading around that level this year. Again, I'm going to put a vertical line at the beginning of 2013. Okay, and we're going to see what the market has done. Okay. The same thing we will do at the beginning of 2014. We will put a vertical line there and draw the key level, the nearest key level where the price is. And we will take it from there and go into the minor profit. So beginning of the year, the Euro USD, all right, you see here, it went to retest the high of 2012, went above it, only to come back below it. It's a weakness. Display a new high at the beginning of the year and quickly dip below the previous high. It's a weakness. Professional understood that and they sold it down. Okay, price form a kind of double bottom here. Next level, it went back again near the high of 2012. Pull back again, display a triple bottom. Now again from the triple bottom, where it went to? Again to the same level. And the professional were busy selling each time the price was approaching the high of 2012 for the Euro USD. Finally, around in September, why? In September, something usually takes place. Professionals start adjusting their portfolio. There are a lot of activity taking place because a year is about to end. You understand? Okay, a year is about to end. All right? You have to understand that the last quarter is October, November, and December. So September is the quarter before the last quarter of the year. There are some adjustments taking place, preparation for the year end, and preparation for the new year that is about to begin. Finally, they don't sell it anymore. Price went above the high of 2012. You see here, it went above it. Display a new high compared to the highest high that we have achieved in February. Well, so if the price went above the highest high of the year, good, it's bullish. But if it goes back below it, it's bearish. They sold it again. Down. Next level, okay, here. So now where is the price? It's very close, okay. You can see this on a daily chart. You can see Euro yesterday tried to retest again the high of 2012, isn't it? Yes or no? And now today it's going up. Same thing we have seen for Apple stock. Have you forgotten? Okay, let me show you again if you forgot. Same thing Apple. Apple went down yesterday and today is going up. Euro USD went down yesterday. It's going up again like Apple stock. All right? All right? So yesterday, you see the media line, all right, of 2012. Price went above it, okay, pulled back yesterday and going up. Euro USD, currency pair, what it has done, okay, went above the high of 2012, okay, yesterday, you see, it retested, tried to retest it yesterday, now it's going up today. This is how, okay, the smart pro traders are trading, especially when we are coming to the end of the year. The key date that I want trader to remember, the 15th of November each year, and also the beginning of the year. In fact, throughout the year, we must know where are the key levels from the yearly chart. If you are using a charting software that does not allow you to see the yearly chart, well, it's your own decision. It's very important to know, to see the yearly chart. In fact, I cannot trade anymore without seeing the yearly chart. It's very important for me to see the yearly chart. All right, it makes sense. It's also powerful. I hope you have learned something from this video also. all right, and we put it into use, okay, to make excellent trading decision. This is about how, okay, to trade like a smart, a pro, a trader. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Speak to you soon.